Hello and welcome to Got Stocks. Today is April 30th, 2024. It's Tuesday. Now we're going to look at Amazon, AMD, and Supermicro Computer. Okay, we're going to look at advanced micro devices. Now the stock analysts, they're saying it's a buy. The target price is $200. The stock is currently trading at $160 and change. So now what we want to look at is the PE ratio right here is 307. All right, so let's look at the market cap is 259 billion. The average volume, the 50-day volume is 57 million. Today's volume is 38 million. So Advanced Micro Devices is an American multinational corporation and semiconductor company based in Santa Clara, California. We're looking at a 6-month daily chart. Each candle represents one day. The white line is the 10-day moving average. The purple line is the 21-day. The green line is the 50-day, and the red line is the 200-day moving average. When you take a look at the open of the day was here, it basically pushes all the way up to 227.30, and then it sells off the entire day. It sells off the entire day and it closes down at the bottom of the range on substantially higher volume. This is get out of Dodge quick. You want to leave because this stock is breaking down. And you want to get your head wrapped around the basics of candlestick charting. And this is the reason why, because when you see this form and you see this type of volume, after the fact, the whole stock has just been in a downward trend since then. We have the earnings is coming up after the close today, and we're going to see what the earnings are. But it's trading below the 21-day and the 50-day moving average. It needs to develop some type of base. We need more time with this stock. This stock is not ready for anything. I would put this one on the back burner and not do anything until the chart. You need to plan a trade. What is your setup? Do you have a setup? Are you just buying blindly and hoping and keeping your fingers crossed? That'll work sometimes, but over the long haul, that's just a bad recipe. So that will complete our analysis for AMD. Supermicro Computer is reporting earnings after the bell today. The 1-year target price is 961. The analysts are reporting it to be a buy. It's currently trading at 865. The stock is off 24.58 today. Now, Supermicro Computer is an American information technology based in San Jose, California. Its manufacturing operations in Silicon Valley, also in the Netherlands. This company was established back in 1993, so they've been around for a while. 50-day average volume is 6 million shares traded per day. Today's volume is 4 million. It's on the light side. The market cap is 50 billion, and the PE is 70. January 29th, the estimate was 494. The actual was $5.59, and the stock took off. Now, prior to the earnings, the stock did gap up. It gapped up. It closed on this day, and it gapped up here. And it was in a consolidation period all through here, and it breaks out of this consolidation period on volume. So the volume was exponential. The volume increased to 23 million shares. So if you look at the average back in this range, it was probably more like 2 to 3 million shares per day. On this day, it trades 23 million shares. What that means, if the average volume, let's just say it's 3 million shares traded per day for the last 50 days. When a stock breaks out on 23 millions, just picture 23 million people lined outside of the store ready to come in and they want to buy a share of that stock. That's substantial. And that's what you want to get your head wrapped around, is looking at volume analysis of what happens, how the stock reacts. And the stock was extended. It did not retest its 10-day moving average until the peak here. The actual stock breaks down on February 16th of 2024. We had a nice little run, and the stock for the past 6 months, the low was 226.59 and the high is 1229. So it's up only 1,000. That's insane. Let's take a closer look to see what's going on with this stock. The PE ratio relative to the price, it is on the high side, but compared to some of the other stocks, it's not as bad as you think. But here we have a major sell-off. It comes down, it tests the 10-day moving average, it reclaims it, bounces off of it, it gaps up through here, it goes to our all-time high, and we've been in a retracement since then. So since the all-time high that was established March 8th of 2024 at $1,229, we had a sell-off, and it breaks the 10-day, and then over here it breaks the 21-day, and it hadn't broken that for a while. If we look, it's been, a couple of months, and it hasn't broken it, but now it's broken it. It's trading below it. Here it's recaptured the 10-day moving average. It's trading below the 21-day and the 50-day moving average. We have a big sell-off here a few days ago, and the volume's picking up again. For my taste, I want to see more information, more of it establishing a base, trading above its moving averages. I just don't see a lot of positive reasons why I need to get into this stock at this particular point. And that will complete our analysis of Supermicro Computer, an American multinational technology company which focuses on e-commerce, cloud computing, digital streaming, and artificial intelligence. I liked how they threw that in there. So let's take a look at the price of the stock. It is $179.51. The analysts are giving it a strong buy with a target of $215. The average volume is 38 million shares traded per day. Today's volume is 41 million shares. The PE ratio is 62.59. The stock gaps up on its last earnings. If you look here, it gaps up, it consolidates, and then now it's been in an upward trend. We've had a little bit of a retracement here, which is okay because the whole market has been under a lot of pressure. For the past several months, it's respected the 10-day and the 21-day. It broke it here, went to the 50-day. We're going to draw some support and resistance lines. We have a level of support here. Now, when the stock recently gaps down, it comes to this area. This is where it gapped up and retested this area. This balance range right here gives us a level of support. We also have a balance range here. We peak out at 189.77. We're in a retracement. The stock gaps down, telling us, hey, the stock had enough here. It stopped here and it goes back up. What is here? This was resistance, which now becomes support. We go up, we come down, back to this support area. It breaks it. Where does it go? It goes to this support area, and here it bounces off of there. Now this particular candle is a very bullish candle, but if we come down here and we look at the volume isn't really that convincing. It's just average volume. Where would we enter? Let's see how the stock reacts after the close. The moving averages did break, but the stock did recapture the 10-day. It's trading above the 50-day. Now these need to cross over and they need to get in alignment. The 10, the 21, and the 50. You see how they're all in alignment. The 10 is first, the 21, and the 50, and then the 200-day. This is a healthy upward trend when all of the moving averages are in alignment. Here's the 200. right? There's the 50 and the 10, but we have the 21 is trading above it. We need these moving averages to cross and to become more in a positive upward trend. I do like the way the stock looks now. Let's see how it reacts to earnings, to whether if it's going to be a good time to get in on this stock. And that will complete our analysis on Amazon.
Hopefully this will bring value to your investing and trading process in the stock market. If we bring value to your process, please show us some love and subscribe, like, hit the bell. So always remember to dot your I's and cross your T's, and don't forget the Z. Happy investing.